Welcome everyone to another episode. I'm back with you guys to do a weekly price action review. As I mentioned last week, this is something that I do every weekend. I think it's massively important in terms of allowing one to be self-aware, be self-critical, to look at price action from from a position of stepping back. Look at the opportunities, what price action did, any indicators which would have suggested what price action was going to do, where potential trade opportunities actually existed, if they were not taken, and why, and so on and so forth. It's a really good practice to do, and it's something that, if you're new to my channel, one of the things is about improvement through journaling. And this is a critical and a key non-negotiable task that any aspiring trader who wishes to really make a go at this profession should be looking to do every weekend. It's super important, and it's incredible how much you will improve as a trader by carrying out this task against your models, which is super important. It's not a case of just plotting stuff on a chart and price at this and so on and so forth. You want to do it in alignment in alignment with your model, how you would approach the market. But what you're looking to do is spot the key indicators that would have potentially of supported your decision making in potentially going down a different route, or would have even supported the view that you had but maybe you didn't initiate through a lack of confidence, or whatever the case may be. But ultimately, this is a super important task. It's something that I've done religiously for a good few years now, and obviously we sat together and I went through last week, so we're going to go again this week as a top-down approach, and we're gonna get after it. So this will probably take about 45 minutes to an hour. We'll get through it, and this gives you an idea, sitting sort of looking over my shoulder, of how I go about this process. Everybody's going to have a different take on this. There's going to be different styles, different ways of doing it, but the fundamental premise is you want to do a weekly review of price action. Okay, so let's get into it. So on the chart, we've got the weekly chart of ES. So naturally, I'm doing this based on ES. If you trade NQ, do it on NQ, and so on and so forth. If you trade Forex pairs, do it on ES, GU, whichever, but it's just important to do. So I'm looking at the weekly chart to understand what price is likely to do. In addition to that, I'm also looking at looking at the economic calendar. And following the economic calendar, we know that we had news on Tuesday, Wednesday, Thursday, Friday. Now, naturally, I don't trade Monday. I like to see what happens on Monday. And Monday this week, or last week, should I say, was a bank holiday. So, furthermore, that was that almost kind of provided that day off for everybody. Now, don't get me wrong, there would have been people who'd have traded the market, people who'd have traded crosses, and so on and so forth. But for me, it's a day off. So, let's look into the economic calendar. So as I said, we had news Tuesday, Wednesday, Thursday, and then NFP on Friday. So naturally, I don't trade NFP days, but again, there are others who do, and they do very well from that. So I'm not sitting here saying don't trade it. I'm just saying, for me, as a personal preference, when it's news like NFP or FOMC or CPI, I just take the day off. I give myself a license to have a day off. But as I said, there are others who trade it that do very well. So, I'm not sitting here saying don't do it. Each to their own. If your model permits you to trade the day, trade the day. Okay, so going into this week, I ultimately was wrong in my directional bias. I was looking for higher prices. And why was I looking for higher prices? Well, two reasons. One, we had this BISI here, and yeah, let's just take it out to here. Okay, so we had this BISI here, plus we had BPR down here. So if we think about where price action ended last week, if we look at where BPR ended last week, price action ended last week, tapped into this inefficiency here and rejected and closed bullish. So I was looking for a continuation of bullish price action up to this high. And that would have been, let's do that. And that was my approach for the week. So naturally we can see the weekly candle, and I was wrong, but there were trades that I could have taken in terms of, for shorts. So that's not what was lost. So I'm not going to make a note of the weekly chart, but ultimately I'll make reference to this on the daily. So that was my outlook for the week. So if we drop down to the daily chart, which is where things will ultimately begin, we can see that was the close of last week. We obviously had this high here, which I'm just going to mark up. Okay. So that was a key level for me. We also had this inefficiency here. Just going to enlarge this so I can grab that. Okay. And we can see how price Friday traded up into here. So naturally I was looking for a continuation higher, purge the high, and off we go. This fair value gap here. Wrong one. Okay. So as we can see, that price did trade down into this Discountpedia array during the week. And I believe that is it. Now, yes, we're inside this breaker. By all means, you can draw the breaker out, but I'm more interested in the fair value gap. So that's the reason why I'm not drawing the breaker here. This fair value gap was also was this fair value gap key for me during the week from a reference standpoint? Let me remove that for now. I don't believe that was a reference point. It could well have been. We obviously had this break of market structure here, which I will just reference there, but I'm not necessarily paying attention to that at present, but that came into play as we traded and closed below it. We displaced and closed below this level here as well. So when you couple those things together, it supported the idea of lower prices. Okay, so as I said, heading into this week, I was looking for a continuation of higher prices, but that didn't happen. Now, let me just double check. Did we purge above this high? 69.75, I forget. Yes, we did. We wicked above. So we already have SMT up here with NQ, but I didn't utilize that as a reference point. So this is how I was looking at the daily chart. The reason why this fair value gap, I believe I didn't have this annotated, was because price traded down and through, and I felt that if we were bullish, there's no real reason for this to occur. However, there was the volume imbalance here, which could have been the draw. So you had that volume imbalance there, price trading down into that, and then we continued higher. But ultimately, because of this Friday close, that's why I was looking for bullish prices for the rest of the week and target the highs above here. I was also looking at this as a consolidation to accumulate longs, so it was permissible to trade down into this, into the weekly, possibly the daily, but certainly the weekly, and then I wanted to see expansion higher, but what we saw was a continuation of lower prices. Okay, but we have, as you can see, in terms of how we closed for the week, respected the BISI in terms of the body of the candles, not closing below CE. That doesn't mean that it won't, especially if we looked at the dealing range. There is, a possibility that we could trade down into a discount of this range, which you can see here, which would mean that this fair value gap inside of this balanced price range, where we've also got a daily balanced price range in here, could be a potential draw within a discount market. So that's something to consider, bearing in mind as well that NQ has already traded down into a discount, which could then bring into question the lows on NQ, and that could potentially provide SMT to see higher prices. So that's possible as well, but again, that is far ahead. We're concentrating on this week. So as I said, for me, I was looking for higher prices. So what I'm going to do is, first and foremost, I'm just going to detail my anticipation based on the economic calendar. Okay, so for me, based on the economic calendar, I was anticipating Thursday to potentially provide the low of the week, which would then see the market target higher prices. So when we look at the economic calendar, that's what I was looking for. So a steady, it could decline early in the week, but ultimately wanted to see higher prices. Okay. Right. Okay, so the day chart. So following on from last week's PA, I was anticipating higher prices, targeting the old high. Okay. with the market in a tight consolidation. I wanted to see some form of manipulation at the lows, with the market then displacing higher. Okay. And you know where we wanted to see manipulation at the lows specifically was inside the weekly / daily BISI. So we want to add that. And this would have been supported by our high time frame SMT. Which hopefully would have confirmed the resumption of institutional order flow to the upside. Okay, so that was my intention. However, it's important to note what happened. So the market traded up into the CB daily, where we noted a high time frame SMT, which was the catalyst of seeing lower prices and the market trading down into the discount PDRAs. Okay, so that is the narration for the dailies, and by all means, once you've finished, always make sure you've reviewed what you have written. Don't just finish, okay, that's it, don't move on. No, reread it, make sure it makes sense, make some amendments where you need to make the amendments. You want these things to be as accurate as possible because they're going to be referred back to, so it's really important that in order to improve on a week-on-week basis, we're constantly critiquing our work. Okay, so let's go drop down to the 4 hour. Sorry, I missed something on the daily, which was that fair value gap once it was created. Okay, and I'll just retake that picture and update my entry. Okay, so 4 hour. Just gonna take that out for now. Okay. So, one of the elements that I took away from this week, share with you now. So the first thing that I want to note before I go into the annotations, I'm just going to note this in my journal, was so as detailed within the daily time frame commentary, I was looking for higher prices, therefore wanted to see the market trade down below the true week open, coupled with a time frame SMT or for me SMT to support the idea of high probability longs. Okay, so I'm just making reference to that now before I then delve into what happened. Okay, so we want, that's what I want, Friday, and Friday was key for this week. And it was something that I took away from the week as a as an element of learning. Okay. And what I'm going to do is going to make a reference of that as, I'm just going to call it Q5 for now, just so I can discern between two. And we want Friday low, which is there. I have no idea why my fans are going absolutely nuts, so I can only apologise because you'll be picking that up and hearing it in this recording. Like I said before, it's probably telling me I need a new PC at some point in time. Okay. Want to take that. I'm just going to reference that as an inversion. Okay. Right. The other thing that actually I want to do first is I want to mark off that. No, so right there, there, on. Why is that not showing? Ugh. Why is that not showing the full week? That's better. Oh dear. Undo that. Okay. And then let's just get that back up. We're into, don't so much need it for Friday. Okay. Okay. Perfect. So this is just me delineating the key swing points of the week that are important to myself. Now I'll just quickly go and I believe that was Tuesday, which it was. In fact, let's do it this way. Okay, again, I think I mentioned this last week. You want to show intentionality about everything that you're doing. It's important. It's extremely important to do so. How have I managed to do that? Q4. Do. Okay, now we want to get the lows in. Let's just take that one. Okay. Q3. Usually have a coffee with me when I'm doing this, but I don't today. Do need to cut down my coffee intake, I think. I drink too much coffee. I'm a coffee lover. Okay. So perfect. Perfect, perfect, perfect. Okay, so going back to, sorry, whilst this is in my mind, let's just do this. In fact, no. Going back to one of my big takeaways from the week was that one of the trades that I missed during the week was, in part, this sell-off, right? And the reason why was because I had a moment of indecision because of Monday being a bank holiday day and having reduced hours. And one of my takeaways, and there'll be many traders who go, oh yeah, I knew this already, but for me, it was something that I hadn't really challenged myself on until this week, was that how to treat bank holiday Monday or a bank holiday day with reduced hours. And one of my takeaways was that from a key level standpoint, specifically around liquidity, go back and use the previous day to it. Now, it may have been something that maybe, even ICT may have spoken about once upon a time, but, it is what it is. For me, it was a case of actually go back and use the last full day, which was Friday. And that will set the framework in terms of what I want to look for come Tuesday. Now, typically we tend to view Tuesday as a slow day, the day after bank holiday and so on, but that doesn't mean that opportunities don't present themselves. And so for me, that was one of my realizations in terms of the efficacy of my model is when we have a bank holiday day, mark up the previous day to that, and that's the reference points that you want to use moving forward. And that in itself presented an opportunity for me to engage the market. Now, unfortunately, I didn't, but it gave me that teachable moment during the week that I was able to journal that and then make the necessary adjustments so that down the line, as I take my methodical approach to my model to engage the market, these are some of the things that I want to be looking out for. And now I have a ready-made plan on how I approach this scenario should it happen again. So that was one of the key takeaways from this week that I thought I would share. Okay, so mark up this fair value gap here. Why this fair value gap? That's the question. The reason why I'm marking this fair value gap is because when we displaced through this old low that we purged, this was the fair value gap that overlay that key price level. So this fair value gap was important to me. This one as well, and the reason why this one as well, because there is a daily SIBI. However, the daily SIBI wouldn't have been created until the close of this day, but this fair value gap would have been there already. So these two, but specifically this one, was important to me. Okay. So that's why that was key. You know, you can mark up this one, but for me, this was the one that I was focused on. Okay. So we've got various things. Okay, right now, let's get into. Okay. Okay. So we're already getting a picture of this week's price action. So and the most important thing, okay, 3-week open. Okay. 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 So with Monday being an US bank holiday, I referenced the previous Friday's PA and its key price levels in relation to this week. To refer back to. Okay. So Tuesday, the market opened and immediately traded above the true week open, where I noted the high time frame SMT, whilst price was also within the SIBI daily, setting the stage for high probability shorts. The market then displaced lower aggressively, into the BISI daily. Okay. Okay. So just a general overview. We're not looking for a full-blown essay. We just want a general overview based on this time frame. So on Wednesday, because we'll get more specific when we get down to the hourly. On Wednesday, the market or price, however you want to reference it, traded up into SIBI H4, which was the SIBI created following the displacement through the old low, and in brackets this signified IOF to be bearish near term. market then consolidated. Sorry, the market then consolidated before heading into Thursday, where the market traded up into CBH4 again, but failing to purge previous day's high before repricing lower, seeking the liquidity below previous day's low. Okay, and then Friday we saw a continuation of lower prices. Close the week. Continuation of lower prices with the market trading down into the BPR. I think it's the BPR weekly to close the week. God knows why my fans are going off on one, but it is what it is. Okay, so there we go in terms of price action, or key price action. As I said, that was important to me. Again, whatever is important to you in terms of your model, the things that you look for, the PDRAs that you look for, that's what you want to annotate on your chart, and then you want to provide some form of commentary applicable to that time frame. Okay, and you find that the lower you go, the more detailed potentially the commentary will become. Okay, so let's get down to the 4-hour time frame. Okay, here we go. It might be interesting if we let's just have a look at something. That's the one I want. Right, interesting. Look at that. Interesting. If you wanted to, you know. Anyway, I don't, but very interesting. Okay, so let's continue. Let's continue. Okay. So we had okay. We'll just do it. Oh. Silly me. Is that what I'm after? Some people call it CISD, some people call it a CSD. I just call it a CSD with silent I. So high probability order block. Right, I am, because I'm going to be very specific in here. So I want that, which based on the reduced hours of Monday, still keep. And we can oh dear, I don't want it squished too much. Okay, we'll go with that for now. Okay, so you want to just go through each day. Just identifying key PD arrays that either are, that are important to you for a plethora of different reasons. Okay. High probability order block there. Okay. Yeah, just do it to there. I can only apologise for this fan on my PC, and hopefully it doesn't interfere with the sound too much. Now, this is a high probability order block, however, there is an M15. There is an M15 order block in here which ultimately was used. Okay. Is there anything else that I need to... Wasn't really much on the H1 time frame. Don't think there was much at all, if I'm being honest. So, Okay, so just put in the high impact news drivers, and then ultimately FOMC, and then we add a speaker. Was it 11 o'clock? Okay. Let's just see. Yeah. Okay. Yeah, I think that is that a pretty easy one this week. Actually, so what we've got is it's Tuesday. Okay, and Thursday. Okay. Cool. So they were the two models of mine that were present during the week. And I think that is all for Monday. So now we can document the week now. Okay. Okay. So Monday, this was a US bank holiday. Therefore, I did not trade due to, or in fact, I did not look at price action due to the reduced trading hours. However, the market did consolidate at around the true day open. Okay, so very simple for Monday, nothing major there, but we just want a brief narration just to determine exactly what happened. Okay, so Tuesday, so the market opened and immediately traded above the true day open. Can't type here. And true week open. Following the I time frame, some SMT. Set the stage for lower prices. Sorry, above the true day open and the true week open, and into the CB daily. Market then displaced lower, seeking liquidity below the marketplace, ultimately trading down into the BISI daily. At close. Okay. Pretty simple stuff. Now you can also mention, so where I've got the market traded both true day open and true week open into the CB daily following the high time frame. You could say, well, what I will be saying specifically, trading into the bearish high probability order block before rejecting. Okay, so Wednesday, it's interesting. Market opened initially trading below the true day open to set what would then become the low of the day before repricing higher to set the high of the day. Hang on. Before repricing higher into the CBH4 to set the high of the day. Okay. Market then repriced lower before consolidating back within the BISI daily to close the day. Okay, so that's Wednesday. See, really simple stuff. No, it doesn't have to be, I mean, you can make it as detailed as you want. I purposely just want to touch on the key elements of the day and then go from there. Okay, so Thursday, the market opened and repriced higher above the true day open, forming BSL London. In fact, the market opened below the true day open, forming the SSL London. That's more accurate. Before bloody hell, sticky keys. Before repricing higher above the true day open, forming the BSL London. That's better. Okay. Market then repriced lower back below the true day open, purging the SSL London whilst also forming, which I haven't got on chart, which I'm going to add now, which is important. I think that was with NQ, if I recall. Sorry, no, it wasn't with NQ, it was with YAM. I remember it was with YAM. Okay. Which set the stage for higher prices. The market repriced higher, purging open, purging the BSL London, and trading up into the CBH4, but failing to purge the previous day's high. This set the framework for SMT. With NQ before the market rejected, repricing lower and purging the previous day's low. Okay. Market then repriced higher before consolidating for the rest of the day. Cool. Okay. And then into Friday. Okay. So the market opened before repricing lower, setting the SSL and LDN. So that's important actually to mark up. So that's a bit slack by me there. Bit slack. And maybe that's why I think that my charts are looking a little bit light. So I will just run back through making sure I've got these key time-based liquidity pools. Yeah, key time-based liquidity pools set. Hang on, the market repriced lower, purging the previous day's low before setting. Okay. Where am I? Market then repriced higher. failing to purge the previous day's high before displacing lower down into the BPR weekly to close the week. Now we could make reference to the high impact news drivers, because they would have been the catalyst for pricing higher, and so on and so forth. So I'm just going to so then one of the areas that you want at the bottom of this entry, this whole journal entry, is what were your key takeaways? What did you find as you annotated price action and focused on certain areas or certain key levels and so on and so forth? What did you find? And it's important to document those things. Okay. Okay, so I've just made note of, when a US bank holiday occurs with reduced price action, refer back to the last full day and its key price levels. Okay. Okay, I just wanted to tidy up that sentence because I sort of rushed it. So, so one of the things that I'm going to do is just quickly run through the days just to make sure I've got some key levels that are important. So we head into Wednesday. There, for instance, it's important to mark this up, despite the fact. Oh, Jesus. Despite the fact that the day consolidated, it's still important to annotate some of these key levels. Okay, so that's that one there. We've probably got a previous day's low in there, so that's fine. And traded on through. New York created the high of the day, which is fine. We have the. We do have the New York low here, which ultimately, let me just have a look. Oh Jesus, what is this thing doing that for? Which essentially went on all the way up to here. Okay, so we'll just mark that up. Okay, and that to me is all the important stuff. Okay, so I'm just going to update my chart. That's the beauty of this review. You can oh Jesus. So I'm just getting rid of stuff that I'm not supposed to get rid of. Wrong chart, that one. That's the one we want. Okay, so updated the chart. Updated the price, updated the chart. So really happy with that. One of the final things that I like to take track of, you don't have to, but it's just something that I like to do. Find the high of the week, which was here. Find the low of the week, which was there. That's 275.75. I like to make reference to 275.75. Drawn liquidity was clearly the BPR. So again, make reference to that for me, and it was a bearish week. Okay. Cool. Okay. So that brings an end to that weekly review. So again, I'm cutting these raw. So there's going to be talking. It's not polished, but this is how I like to do things. I want people not to just see some edited finished products that look so streamlined. These are the things that I'm doing, the mistakes, whether I make them, the things that I'm querying, that sort of stuff. This is how it should truly be when you are journaling. And I want to give the audience that perspective, not one where it's heavily edited and it just looks so streamlined and people are sitting there thinking, wow, how did he do that, and so on. No. We want this to be raw. So again, improvement through journaling. This is an important process and must be done every weekend. I'm going to continue to roll these out every weekend so that you can look. I'll be honest. It's from a selfish point of view to hold myself accountable and see how I improve. So I can recall. I can go back and listen to the things that I'd said and see how I've developed, how I've improved, the things that I've included, the things that I've omitted from my daily process. So once this has been completed, go downstairs, have a little break, half an hour or so, whatever it may be. Then come back and read back through what you documented, the commentary for each of the different time frames, just to ensure that you're happy, you're comfortable with what you had written. Maybe there was some bits that you missed that you just want to sort of double down on. Whatever it is, it's important for you to do the work. Make sure it's as complete as you feel it should be. It contains all the elements that you feel it needs to contain and that you're happy with, and then you just kind of move from there. So hopefully you enjoyed this episode. Hopefully this was something that there was things in there that you can take away. Again, the key thing is to focus on the process. Don't get bogged down on the things that I do, the things that I'm looking at. Everybody's going to be different. But this should just give you a vantage point of how I do it, and then you go away and you improve upon what I do, or you go and tailor it. More importantly, you go and tailor it to the things that are applicable to yourself. So hopefully you found this useful. Hopefully there were things that you could take away from this and potentially add into your own processes. Maybe there's nothing you've learned, and that's fine. But I always think that it's important to learn through journaling. This is a key process that must be done every weekend by any trader who has any aspirations of being successful. Those who don't do it won't be successful. It's as simple as that. That's not me sort of just preach to the choir, whatever. If you do not journal daily, if you do not journal weekly, you will not be successful, because you have no reference point to determine where you have improved, how you have improved, what things were focused upon previously that actually are not necessary to be focused upon now. How do I track my development? That's why this process is important. So hopefully you enjoy the session. There'll be more from me during the week, but in terms of weekly reviews, I will catch you guys next week for another weekly review where we'll do another top down. So until that point, stay safe, have a good trading week, and I will catch you guys in the next one.